For more on Disney's quarter, let's bring in Tom Rogers, Executive Chairman at Engine Media. He's also a former NBC cable president and a CNBC contributor currently. Hi, Tom. It's great to have you here. I'm just going to open up the floor to you and let you give us some opening thoughts here on Disney. A lot of things to like: subscriber numbers, what's happening at the parks. Chapek just saying strong demand continuing despite Delta. What do you make of this quarter?
Well, I hate to bring down the euphoria about Disney here. I think you should have cut me out and let it stand where it was. I will say what is particularly impressive about the parks numbers is they did that off the back of no international travel. So the fact that they are able to put up those kind of park numbers show that there's a lot of domestic demand, and I'm talking about the U.S. parks, of course, and that says something about their flywheel, as Tim was saying. But this stock has been trading off of the streaming numbers, and they do a wonderful job of putting up these Disney Plus headline numbers of 116. And I got to tell you, until they tell me where those subs are coming from and really break it down, I can't quite join the party of excitement yet. I have a feeling that most of those were coming from Hotstar in Asia. And until they say what Disney Plus did domestically, which is really where we have some sense of how much competitive juice it really has. Remember, last quarter, they only put up 500,000 domestic Disney Plus subs. ESPN Plus, it looks like, did 1 million this quarter of incremental subs. Hulu looked like it did about the same. If Disney Plus didn't do at least those numbers with all the motion pictures that they were putting out that were intended one way or another to promote more streaming Disney Plus subs, it's hard for me to get excited yet. And that's one of a number of questions here that I think they still got to answer. The people get excited about those headline subs, but the profitability of subs is really where Disney's transformation story is going to hit the rubber and hit the road. And, you know, when you look at what makes up their DTC revenue, Hulu Live, ESPN Plus, Hotstar, it's about 30% of revenues. Those are much, much lower margin businesses than we're looking at with Disney Plus. So a number of big questions I still have yet about whether this transition story to digital streaming is as rosy as I think people want it to be.
Tom, what Courtney did not mention in her bio is the word stud, so I'll say it. Total stud. But let me ask, just to play devil's advocate.
Now,
you're waiting for that, right? I know it's on your bio.
I think he dressed up for you. He's looking particularly dapper today.
I got to live up to the nomenclature here. I didn't know how else to appear if Guy was going to come out with that.
Well, I clearly did, and you clearly were successful. But just to play devil's advocate, the Street was looking for a lost direct-to-consumer operating income about $540 million. It came in much better than expected. Still a loss, albeit, but of 293. Does that suggest maybe the trajectory is better than people like me give them credit for?
Well, I think the trajectory of top-line growth and subscriber growth is good. But again, it's what's underneath the hood there. A lot of Disney Plus subs come through telco, come through Roku, come through Apple TV. When you see those revenue numbers, I don't think they're taking the 20 to 30% toll that those various partners take off the top in terms of what the real revenue is. What it all comes down to is really engagement. And, you still have most analysts out there looking at YouTube, Netflix, and then Roblox and Fortnite taking up a lot more kids' entertainment time than Disney Plus is yet. So you have that, and then the parent company Comcast issues with Hulu still being unresolved. And you not only have a huge number that Comcast is going to get paid for their 1/3 interest in Hulu, but it looks like it's really tying up in arbitration the whole question of Disney's legitimacy and putting Star name on it when Comcast is claiming it's really Hulu that went international. And that looks like it's much messier and needs to really be resolved for a unified offering of Disney Plus and Hulu to emerge, which ultimately I think is what will strengthen Disney's streaming performance substantially. And then they're out there with the name Star internationally, and Stars has sued them for not being able to use that name because it's confusing with Stars, and that's a whole other overhang here in terms of the streaming story. So there are a lot of unanswered questions before I get too excited about just how good the story is. Their IR people are phenomenal, though. They know all they got to do is put out the headline number, and the market gets excited.
We do a lot of talk, of course, when we're talking about streaming and cables, about bundles. And you think that Disney needs to really figure out what their bundle is. You're not thinking that going niche kids is the way to do this long term.
No, and I think they are going to have some real success as they bundle more. But today the bundle is a pricing bundle. You can get Hulu, ESPN Plus, and Disney Plus for a bundled price. And I'm sure that's having some impact on the performance of the sub numbers here. But I really think to take on Netflix, having a much more unified offering across their services is going to be a really important thing. Now, I will say they've done a hell of a good job tying up sports rights for ESPN Plus. All the major sports contracts that they have re-entered here, they've gotten streaming rights. They clearly have a path to take ESPN Plus where ESPN has left off, everything but the NBA, which comes up in 2025. And so they really got something to work with there. But, you know, the other side of that is how fast is the decline of ESPN and the cable bundle going to be? Keep in mind, cable viewing, even with pandemic numbers, was down 20% year over year. Disney takes the biggest hit on that than anybody. And so they got a lot of hair coming at them on that one as well. That is a whole other thicket of issues.
Thank you very much, Tom Rogers, for being here with us. You've given us an awful lot to think about and trade on. I'm going back to Dan Nathan because you went to Mr. Rogers. You wanted to get his thoughts. You have them. What do you think? Did he change your mind on anything? He was a little bit more dour than the rest of the desk on this one.
Yeah, no doubt about it. I mean, but Tom's been a raging bull on Netflix for years, and he's been coming on our show talking about it. And I think he makes a really good, point about what's going on with ESPN as far as the TV subs, but also versus the rights. And I actually believe that live is going to be a really important part of this going forward. And if you look at the fact that, we're just talking about Disney was flat, heading into this print on the year. Well, you know what also was flat or down a little bit is Netflix. And I think investors are starting to kind of rethink about what the growth trajectory is, both here and internationally. Tom did mention a couple times that he wants to know who are the subs? What is the breakdown? What is the breakdown here in the U.S. in particular, where ARPU is going to be higher? I do think that they're going to probably figure something out between Hulu and the bundle that they have and really figure out how to leverage those live sports rights versus what they're losing over there at ESPN. So to me, I'm generally fairly constructive on Disney. I just think that, again, what we were talking about, we started talking about the parks and the experiences, that sort of thing. And Tim made a great point. Yes, it was close to 40% of the total pre-pandemic. We will get back there, and there's going to be a lot of pent-up demand for it. And if you do get some of these things going right in the streaming, you will have a higher valuation. So I think it does grow into it. But right now, investors seem a bit unclear about the valuations for these streaming subs for both Disney and for Netflix.
Fair enough. I still think at some point we're all going to figure out how many streaming services we really need, how much cable we really need. It's very confusing. I want to watch a show. I don't know where I'm supposed to go.
We need a lot of CNBC. So,
obviously.
it's
so
pretty clear
I'm definitely still a cable subscriber, and everyone should be, in my very humble and biased opinion.